How's everyone doing? That's how the cookie crumbles. Actually, so for those of you that don't know, is everyone on here? Is all my new people on? Just want to make sure is my new people on. New people, if you're new, press 1. Or just say I'm new. New people, if you're new, press 1. Also, compliance, you have some people that are trying to get their card processed and whatnot. I don't know if you could.
Okay, you could go ahead and start, Dimitri.
Okay, cool. We're gonna start in 1 second. Guys, make sure your gold screen is up.
And guys, just for those of you new, and for everyone, if you refer someone, you get 10%, okay, of the cost of the course cost of the course. Okay, there's an affiliate link, so make sure if you don't have an affiliate link in your account, just email gmgcompliance@gmail.com. G as in gold mine, gmgcompliance@gmail.com. And I'll give you your affiliate link. And when they hit that link, when you send that link to the person that you're
Contact Astro Boy 88. I'll send you his thing home. Okay, perfect. Awesome, guys. So I know some people are trying to get on, couldn't get on, but yeah, so we're looking at gold right now, and let's just have a look over on how gold is doing. Okay. So Wall Street opens at records high after twin boost from economy. Dow up 220 points. So let's see actually how that went. Because if Dow is up, then gold should be down, right? Let's see. Did US 30 go up? US 30. Yup, US 30 is up, boy. Up like a duck. Okay. Now let's see DAX. The DAX, which is sure 30. That's up too as well. So the consolidation never broke through here. Never broke through. But you know what? I'm keeping my pending orders here. And the reason why is because this is keeps happening, right? We're like, oh man, it's down, then it's up, and then it's down, and then it's up, then it's up, and it's down again. And so now I'm just saying, like, okay, you know what? Maybe it might come up one more time to smash through these levels because it's been at an all-time high for quite some time. And also gold did not correlate as well. So gold did not really go down today. We see gold is more on the upside. We got in at, I think it was 60. No, we got in at 65. I wish we would have got in here. It would have been much easier for us to bear with the trade. But we got it at 65. I think the highest price went was what, 68? That was the highest price went, was 60. We got in at 65. Yeah, right here. We got in right there approximately. So 65, 38. 38 points is the highest that it went. I'm sorry, it actually went 43 points. So 43 points for entry. That's pretty good. That's pretty good. Okay, so let's look at here. Initial jobless claims. Let's look at the news. U.S. stocks market opened a new record high on Thursday, fueled by stronger than expected retail sales and jobs claims. Initial jobs fell to the lowest since the pandemic began, and a sign that the pace of layoffs, which remain discouragingly high through the first quarter of this year, is finally beginning to slow down. Retail sales for March, meanwhile, surged nearly 10%, well above expectations, leaving spending almost all categories. I'm having tongue twisters today. Of goods above where it was before the world's first heard of COVID. Okay. Now, I am Ian Shepherdson, chief economist at Payfin Macroeconomics, noted that a correction in retail sales after April seems likely, as spending patterns switch back increasingly to their pre-COVID status, but attention, they will switch to spending on non-retail services, which will skyrocket as the economy reopens fully. Among the early movers, Coinbase stock rose 2.8%, still finding supports after reports indicated that Cathie Wood's RK investment company bought some $250 million of stock in its debut Wednesday for its suite of ETFs. By contrast, battery maker QuantumScape fell 6.3 at 2021, lower after short seller Scorpion Researcher published a report on the company, accusing it of being a pump and dump. SPAC, scam by Silicon Valley. Celebrities that make Therons look like amateurs. There was no immediate response from the company. Of course, they wouldn't say anything. After someone scams, they just never say anything, which I guess is the smart route, right? Chip makers were broadly higher than after Taiwan semiconductor manufacturing warned overnight that the global shortage is likely to drag on to 2020. Okay, stock was down 2.1%. So all these stocks are down. Delta stock fell on disappointment that it move up estimates when it will turn profitable. The airline says this third quarter is still its target. So yeah, we see, initial jobs claims fell to their lowest since the pandemic began, and a sign that the pace of layoffs, which remained discordantly high through the first quarter of this year, is finally beginning to slow down. So that's a good thing. So that's why we see stocks head up in those directions. Okay. Now let's look at what was for gold, really. That's what I'm trying to look at. Okay. Earning seasons. Let's see. Bank of America. Ooh, remember I told you guys buy Bank of America last month? Because Bank of America is invested into Bitcoin. Warren Buffett is also invested into Bitcoin. That's how he's able to that's how he's able to invest in Bitcoin without actually investing into it. So Bank of America has had a similar vein early Thursday with blowout numbers and the announcement of 25 billion share buyback, while Citigroup is also due to release the belt. Investors will also pour over financial results from the likes of food and beverage giant Pepsi, Coke, healthcare company United Health, as well Delta Airlines, which has struggled along with all the other travel stocks during periods of down. Also, interest Thursday will be Coinbase Global, after the cryptocurrency exchange saw volatile trading on its market debut Wednesday, eventually closing around 30% higher than its reference price, helped by Cathie Wood's ARK investment buying around 250 million of stock. Okay, so we see that stocks did well. Doesn't get into detail too much about gold. If we do want to get a little look on gold, the best thing that you could do, which my expectations was, to see how price would react, but here it is. Gold powers 6-week high as charts turn friendlier. Okay, let's take a picture of this. Boom. Editor's note. With so much market volatility, stay on top of daily news. Get caught up in minutes with our speedy summary of today's. Okay, sorry. That was just marketing for them real quick. Where were we until we were rudely interrupted? I'm glad we got out of peso. That was a great trade that we had on peso. Great trade. Okay. So gold prices are sharply higher near daily highs and have hit a 6-week high in late morning trading Thursday. Prices have been technically bullish upside breakout from the conjunction area seen on the daily chart bar. Buy stop orders were triggered when June futures pushed above what was the stiff technical analysis resistance at April's high at 1759. A weaker US dollar index, a rally in crude oil futures this week are helping to propel gold and silver markets. Silver hit a 3-week high this morning. June gold futures were up last $29.70 at 1766. Okay, what does that tell us about anything? Nothing. Okay, here we go. Okay, so macroeconomic outlook to dominate gold market, not geopolitical uncertainty. Okay, so the world is seeing a rising in geopolitical uncertainty with tensions rising between U.S. and Russia and China, and further instability in the Middle East. I don't even know why we're there, right? What are we doing there? While this volatility could create some safe haven demand for gold, one firm said that it might not be a significant price driver. Analysts at Metal Focus recently looked at the impact geopolitical instability has on gold. They said that the foreign affairs issues could create knee-jerk reactions in gold. However, the move traditionally does not prove to be sustainable. The analysis noted that this pattern has established itself in the last 40 years of conflicts. Due to the rising tensions at Russia-Ukraine border, Metals Focus looked at time these two nations conflicted with each other. Having fallen to a multi-year low towards the end of 2013, gold has staged a short-lived recovery, which saw it briefly exceed 1380. While the crisis underpinned these gains, they proved to be short-lived as the positive macro backdrop continued to weigh on gold, the analyst said. However, the analyst also noted that the sanctions placed on Russia after it invaded and annexed the Crimea region prompted the country to diversify some of its foreign reserves, which is where they hold gold. As a result, the Russian central bank became a major gold buyer. The UK research firm noted that in 2017 North Korea missiles crisis, gold prices enjoyed a short-lived gains. However, investors were ultimately more focused on the global economics growth. Another topic that Metal Focus is watching is on the ongoing dispute between US and China. The analyst noted that the trade war during the Trump presidency helped push gold prices up to $1,500 in an ounce in mid-2019. The latest example Metal Focus looked at was the January 6th storming of the Capitol Hill in Washington. Trump was moving the market, boy, last year. Crazy. The storm of the U.S. Capitol this January has pronounced impact on gold. So all of these certain things affect gold, right? When countries go to war, when there is trade wars, when there's disputes, when investors are scared, central banks are buying gold. Central banks are one of the major buyers of gold. They're probably have gold positions right now that they're holding until 2022, 2023 to correlate with Bitcoin in that sense. So the latest example focused on blah, blah, blah. Okay. So where was I? So far this year, gold prices have struggled as bond yields in the US dollar have pushed higher due to the growing expectations that the US economy will see a vigorous economic recovery from the COVID pandemic. Metal Focus said that they will remain dominant factor driving. Metal Focus has said that this will remain the dominant factor driving gold prices throughout the year. The analyst said that they remain bullish on gold as they expect interest rates to remain low, even as the global economy recovers. So when interest rates remain low, when they remain at zero, then we see gold skyrocket, right? So it's a back and forth process, Now, if interest rates were really high, then that'd be a different story, right? So, while several while several geopolitical events have the potential to escalate, including the Ukraine border, so while several geopolitical events have the potential to escalate, and if they escalate, that means gold is going to go through the roof, including the Ukraine border. More important for the gold price will be the supportive macro backdrop, the analyst said. Monetary and fiscal policies, including the persistence of ultra-low interest rates and negative real yields, and concerned about future inflation, will continue to make the case for strong gold investment in a foreseeable future. So that is also another reason why we see gold rocketing, right? And think about it this way: gold has been in this range for let's go on the daily and look. Gold has been in this specific range of 1681 and 1748, 1756 for the longest. We're now breaking out of that range. So that means this is the consolidation form. We're breaking it out of that range. We're getting ready to see price rocket through the roof. Okay? Rocket. So everybody, keep your eyes and ears pierced for the dispute going on between US and China, and also Russia. And look at how much central banks are buying gold. Okay. Oops. I don't know why I sent that. Sorry. So we're gonna be doing this. Let me see. How many people are in a gold buy right now? Who's in a gold buy? Press 1. Who's not in a gold buy? Press 2. Okay. So we're going to see gold most likely hit 1811. Possibly. The reason why I say that is because, look, this is the highest that price. The gold hasn't been at this price level since March 1st. Now, after a whole entire 30 days, it's broken out. It's broken out. We're at 65, 66, 67, 68. That's 40 pips. 1811. All right. All right. So boom, that's great. We got that going. Now, there's another, so we're looking out for gold buys because of the geopolitical news that's going on with Russia, US and China. When those things escalate, people are going to be like, oh man, US economy, something crazy is going to happen. So let's get price moving to, first of all, let's check if there's any news, upcoming news. Okay, news passed. We had 8 p.m. news. Tomorrow. Okay. What do we see? Any news for tomorrow? That's for today, but tomorrow, no news. And Saturday, there's obviously no news because the market isn't open. Nothing. We can see news ahead. We can, on the 21st, look, you can see news far. That's crazy. We can see news far into the future. Okay. So this is yesterday, today. And we actually had some news. We have some news tonight at 10 p.m. on Chinese dollar. Okay. So let's look out for that. Let's look out for the yen. Let's go to, oh man, what was the site I wanted to go to and show you guys? The CME Group. I apologize. Okay, this is the site I want to take you guys to. So you want to go to the CME Group, which is the Chicago Mercantile Exchange Group. So basically what this website allows you to do is you could type in gold, which I only use it for gold. You could type in gold settlement and you could see the future prices of, you could see the gold settlement on where all traders agreed on at the end of the day of what price was. And so you click that, and then you see here, it says Wednesday, Tuesday, Thursday, Monday, Friday. We see all these prices, right? So today is what? Today is Thursday, right? Oh, well, okay, yesterday was Wednesday. So we see here 1734. That was the price that all traders agreed on at the end of the day. Right? So we go here to 1734. And when 1734 hit, it was here. Okay, let's go back. Look at that. Look at that buy at 1734. And right on the bottom, boy. That was a great buy. So all traders agreed on this price at the end of the day.
Doing Ethereum.
I wasn't buying my charts during this time really like that. I was like in and out, so I didn't get a chance to properly identify the market. Okay. But we could see, look. Right? Once prices come into here, 1734 was the price that they agreed on. Now we're like, okay, well at 1741, we might as well take some buys up to this level. Okay, so this would have been a great entry. And then you could have took profit right here, 80 pips, 1749. Okay, then price dropped again towards this level. And then at the break of this, because here was really the highest point, right? 1758. At the break of 1758, you could have bought again because that was a great buy. Okay. Now, 1734 was a price that all traders agreed on at the end of the day. So what do? We go here, right? And we see, okay, all traded, this is where price settled at, 1734. So we could trade to 1734 or from 1734. In this case scenario, which was the 15th, no, I'm sorry, today is the 15th. It was here yesterday. So in this case scenario, we're seeing around 5 o'clock. Okay, so around this time, we could see that price, buyers and sellers for gold agreed on this price level. So we can trade from this price level here, right? And there's different numerous ways to do that. You could take a buy, you could take a sell, whatever you want to do, right? Like let's say you get a sell in this level, right? You could trade it back to the settlement level of where you're at. So that's the beautiful thing about settlement. Settlement is the price that all traders agree on at the end of the day. And so you go to CME Group and you're able to see that. Okay. Everybody understand that? Press 1 if you get that. So for example, right, we could go to Thursday and go to 1756.
Yo pensé que ya estabas aquí. Puta madre, pensaba que hacía frío.
Okay.
Ahora estoy.
And we can see this is the price that traders agreed on. The settlement is 1756, right? So 1756 is a settlement. That means we can trade to settlement, from settlement, or at settlement. So we can say, okay, you know what? Boom, we're gonna take the break of the settlement level because that's gonna break into a new high. So that's the beauty about settlement. Settlement is a price that all traders agree on at the end of the day. There's different levels to settlement. This could be settlement. This could be settlement. All these different levels can be settlement. Okay? Everybody clear, press 1. If we're all clear, press 1. Everybody, all 30 people.
Ah, qué chueco.
Okay, great. All right, awesome. So now that that's said and done, okay. Okay. I just want to make sure everyone understands the settlement levels. Okay, so that's good. So you want to see the settlement levels? You literally can just go here, type in gold settlement, right? You type in gold settlement. You click here to the CME Group. Go settlements, and they should pop up. And they're different levels too. So you could post different levels from like Monday, Tuesday, Friday, Thursday, and then you could see them here and then trade in between these levels. That's the beautiful thing about settlement. You can trade to it, at it, and from it. So if you know that all traders agreed on the price of 1734 or 5, that's going to be where a lot of activity is happening, or where activity will move from or come to, okay? So for instance, let me give you one more example. For instance, we see on Tuesday, right, of April 13th, of Tuesday, the settlement was 1746. Boom, 1746 right here, Tuesday. Was it April 13th, right? April
¿No
13th.
tenemos parqueo o qué?
Boom, 1746. So we saw at 1746. At this level, this is the level that all traders agreed on. So what do we know at this level? Okay, well, at this point, I guess we can just sell gold, right? We could sell gold at this level. So let's say the sell was here. We know that we could sell because of the settlement. We knew that all traders agreed on this price. So we could trade to it, at it, and from it. So you want to have that level of settlement as a place for resistance. It could be a place of support. It could be a target area. That's a so beauty about settlement and trading at those prices of settlement. I mean, you know it's going to be a buy or sell through your own analysis. That's what I'm saying, basically, right? Like, whatever. I'm just telling you where you can trade it from, where the activity you can use it from. So let's say I'm like, okay, I'm going to trade settlement from here. I know that this price is going to go down because these wicks are exhaustion wicks. They're stop hunt wicks, basically. And so I'm seeing, okay, you know what? These are stop hunt wicks. So price is trying to stop hunt me at 1749, which is a settlement level. Oh, which also happens to be, you know, whatever level, right? So price is trying to stop hunt me at 1749, and I can see brokers, they want to stop hunt. Boom, they want to stop hunt. So I say, oh, okay, you know what? Automatically, I know this is going to be a sell because this is the price that all traders agreed on at the end of the day anyway. So you find a significant level that's very important, right? A psychological level that's very important, and you can trade to it, at it, and from it. Okay. Now, the next thing I was going to tell you guys is what?
Oh, no launches de los que dan en la escuela.
Okay, we had the settlement, and now we're going to go to deviations, okay, which are similar to settlement. So you want to put rising tide. Are these the moving averages? So look at this. This is for the gold trade. Right? This shows you, this is not the deviations, but this is the 12 o'clock indicator. So we can see price is activated here at the 12, and then price shoots up. Compliance, did you just get on now?
I've been on. I just had to log off and log on back
Okay.
to my phone.
So we can see that, right? The entry was here. The buy stop was at 1750, sorry. The entry was the blue line, and the take profit was at 1752, which is here. And it went up. And it's all labeled here. Okay, so we can see that there, which is beautiful. All right? Now, no, that's the same one. All right, so where was I? Let me see if I could find it. Oh, it's GMG ATR, right? I think Column set these points up, but they no longer come on. Column, you said you set these points up for the levels.
Oh, man.
¿Ya te acabó? Todavía.
No, todavía no.
Ya vete, duérmete.
Encontrar pavo ahí.
No sé.
No sé qué va para trabajar.
Oh, apenas va.
No sé, pues.
Solo con su carro.
Con el carro va.
Oh.
Yeah, the ATR, I thought that's the one that you set up the deviation 0.1, 0.2. Okay.
You can talk, Column.
Okay, give me one moment, Dimitri, because I was removing from the old one So give me a second and I'll have you added.
Okay. And just so you guys could see, these are the levels. This is how they're set. Okay. Has anyone heard of the standard bell curve theory?
Para moverme me dolía. ¿Y se fue Tecatina a trabajar?
Sí.
Okay, try again.
Vas a creer que dice el memo de que entré al cuarto. Que qué cosa hacía yo que si entré a robar. ¿Verdad que tú me dijiste que estaba la luz prendida? O sea, le voy a robar ese pobre pendejo, dijera mi papá.
I don't see it. Huh?
It should be under. I just gave you
No fue
access.
con usted sola.
Yep, that one.
¿Cómo cuánto tiempo buscando para qué?
Give me 1 second.
Ya, nomás di una vuelta, no encontré, fui para allá y encontré.
¿Fue contigo el memo? Ay, yo pues tú venías adelante y yo atrás. Ay, tú. Allá está tu escritorio, cosas haces aquí.
Cool. So, great. Now,
Estaba buena la torta ya.
we basically, I don't know if anyone has heard of the standard bell curve theory. So, has anyone heard of the standard bell curve theory? Yes or no? Guys, have you heard of it? Yes, no. All right. So, this is the standard bell curve theory, okay? We could see here, right? Normal distribution. All right. So, we could see that here is the bell curve theory, right? And so this is 0. Everything price starts at 0. Anything this way goes negative. Anything this way is positive. So we have negative deviation and positive deviation, the way that these move. Okay. Now,
Queda aquí, perro.
price is still bullish. I'm not even worried about it. Now, we see that. Okay, let me see. 65. Let me just look at this level.
Ya está pesadilla la.
Give me a second. One day.
¿Qué quiere? No voy a pasear con el vamos de roach. Espérate, pero ya disminuyó la esclavitud, ¿verdad? Ya no los machos que están como antes, o siguen.
67, 66. All right, perfect. So we could see that essentially that these levels are set up in a certain way, okay? So you have the gold level, which is the 0 line, and anything above the gold level, like the buy, which is here, the buy. Wait. Okay. So anything that's above here is black, and anything that's below here is white. So anything that's going for the sell is white, and anything that's going for the buy is black. And so we can see that here. Now, this is the 0 line, okay? This is the 0 line. Okay. 0 right here. Okay. Price break the high, price breaks the low for the OO. Okay. OO. And we see price moves up to half a deviation level. Okay. So statistically, how this works is it's equivalent to throwing a rock in the river, right? If you were to throw a rock into a river, the chances of you making that rock in within close proximity is about 99% chance. We're factoring in the 1% possible, a statistical possibility that the trade may go the other way. The rock may not fully go in, but if you catch a cramp, if there's lightning strikes you, whatever it may be, right? There's that statistical probability. And so that same probability applies for gold. Okay? So we can see that here, right? And we could see it with the OO. The beautiful thing about this, right, is when you're trading from these deviation points. So if I go from the current gold line to this line, that's half a deviation, right? Half a deviation. So with half a deviation, what do you think the statistical probability chances are? Somebody tell me. What are the statistical probability chances? Okay. Now, what did somebody put? 90%, right? There's a 90%, right? Now, if you're buying at 1.0 deviation, if you're buying at 1.0, this is 1.0, okay, then there's a 30% chance it might be profitable. Okay, and if it's profitable, then it won't move too far in that direction, right? And you want to be looking for more of a scalp in that situation, right? You wouldn't want to be buying at a 2.0 because the higher it gets, the less probable that it is, okay? So let's just say this, right? If the market moves up to 1.0 deviation level, then there's a 70% chance that the market for that day will not close above that level. So there's a 70% chance if it moves, the market moves up to 1.0 deviation level, and there's a 70% chance for that day, okay, that it will not close above that market level. So this is what, the 15, okay, boom, the price went up on the 15, okay. There's a 70% chance for that day it will not close above that market level. But we got the 12 o'clock, which shot it up anyway, right? And when we say close, we're talking about close for the day, okay? Now, the market, okay, vice versa, is the same if the market goes down to negative 0.10 deviation level, right? There is a 30% chance the market will close below that level, okay? There's a 30% chance that the market will close below that level, okay? And when it moves to 2.0 deviation, so this is 1 deviation, this is 1.5, and this is 2.0. I'm sorry, yeah, this is 2.0. 2.0 is 3% chance. There's a 3% chance that the market will move beyond 3.0 because it's so low. It's like, how much farther can it go? So what's so great about these levels is they give you the statistical probability of things happening. So if I'm like, okay, you know what, from here to here, I'm going to target perfect. From here to here, I'm going to target perfect. From here to here, I'm going to target perfect. So this moved 1 deviation, 2 deviations. Well, this is half a deviation. This is 1 full standard deviation. And technically, if it hit here, this would be 1.5 deviation, and the next one would be 2.0.
Dimitri,
What's up?
I had my notes from a while back. If I remember correctly, from when it goes up half a deviation, it's 90%. To 1 deviation, it's 70. 1.5 is 15, and in my old notes, for 4th deviation, which is 2 deviation, it was 2%. You just said 3, so I'm kind of confused there.
You zoned out really bad on my side. Can you say that again, bro?
So in my old notes, I had that the 2 deviation was 2%, and you just said 3. So which one is it?
Oh no, 3%. I apologize. 3%.
Okay, because back then you said 2, and I wrote 2 down. So
Yeah, 100%. Yeah, 3%.
okay, because and 1.5 is 15, right?
Yes, sir.
Okay, perfect. Because if you click into the edit wheel, like you wanted to edit the ATR, like the levels and stuff, you'll see that it shows it says 1 deviation, and then it gives you like the percentage, just as a reminder, basically. So if you hit under style for the indicator,
Yeah.
yeah, so I had that under the style, so it helps remind people.
Oh, perfect.
Yeah, if you want to bring it up, you will see it also, because that's where you change the color. But I don't think you realize when you change the color. It said 1st deviation 90%, 2nd deviation, and going down. That's why I wanted to make this small edit, because you said 3%, right? That's why I was asking you about it.
Yeah, 3 to 2%. I mean, roughly the same.
Okay. So I can leave it as 2 then. Okay.
Perfect. All right. So these levels, right, are equivalent to throwing a rock into a river. But when you have the 12 o'clock, when you have levels like that in the 00, now the probability of price hitting these levels becomes higher, right? So from here, it might have been, this is 90%, right? Now it's 98% because you have trades like the 17 reversal, right? Price consolidates, 17 consolidation, reversal. Boom. Okay, 00 breaks the high and low and then comes up to this next candlestick. So you could use these levels to target, and they're beautiful because you know when the reversal is coming. Does that make sense? Does that make sense? All right, guys.
Does anyone have any questions?
So you could see how, look, the 12 o'clock worked out. So I'm like, okay, you know what? 12 o'clock can break this level. So let's get in the 12 o'clock. Boom. The 25 pips above, 25 pips below, we can target the next level, 160. Okay. Everybody understand?
Hey, Dimitri, your Telegram is driving everyone nuts. Can you just?
I think it's only driving you nuts, but that's fine. But where was I? Okay, so yes.
Shannon, you have a question?
You can use these levels to target other levels.
Hold on 1 second. Shannon, your mic is unmuted.
Hey there. My question is on the pullback. You might have just said it, but what's your theory on the pullback as far as the standard deviations?
This pullback right
I'm
here?
missing something in my notes.
This pullback right here?
Yeah, like sometimes it pulls back to the next deviation, and then sometimes it doesn't go all the way back. I'm just trying to get your, I need something to note on that so I understand where I'm looking for when it's getting ready to go to the next, when it's pulling back and it's going to the next deviation. If it stops, what should I be looking for?
That's why I say, I recommend to only target this half deviation.
Okay, got it.
Unless
Okay.
that you are using the 12 or the 00.
Okay, that's what I needed to know. Thank you.
Mm-hmm. So with that being said, guys, I'm going to end today's session. And we will go over this tomorrow again. I'm sorry for that loud noise. We will go over this tomorrow again, and then we will proceed tomorrow. And then we'll go over mindset. But I want to have a little overview of what we're going to be going through. Okay, guys? Awesome. Thank you so much, guys, for jumping on, and I appreciate you. And that's the way the cookie crumbles.
We'll see you guys tomorrow.
Oh, Guillermo, do you have a question?
Guillermo,
do you have a question? If there's a high probability that it's going to break 25 pips, would you take off and manually manage the trade after placing the stop loss on profit? Yes. Ahalam will educate you through that. Okay, so just hit up Ahalam and then he'll tell you how to do that. Okay. Thank you, guys.